Hello everyone, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets. Next week, the weekly stock market analysis show, where we look at what happened during the last week in the market and how you can plan for a better trade for the next week. Right. Remember, this is for the next week that's starting from February 21, Monday, 2022. So let's get into and see what exactly happened last week. Look at the candles. This is a weekly chart of Nifty and the Banknifty that you're seeing here. You can see that it is a green close, but it had gone down from the previous week, and it is at a support zone, right? So this line is what you can see here is clear support, right? It's a swing low. It's previous swing low. It's retested. Same. Bank Nifty, you can see that it is indecisive weekly candle, right? Small body indecisive. You can say it's second week that the indecisive is happening. 2 weeks, the uncertainty in the market is clearly reflected in the Bank Nifty, and you can say this is also some kind of support. So there is a bounce that can happen from this place because it's some kind of previous swing low that is there in the Nifty and the Bank Nifty. Let's detail and see. So 0.5% is it's closed lower by 0.5% in the previous week, and in between there is a bounce also that happened from the previous swing low, right? So finally it's some kind of a spinning top, not exactly a spinning top, but the wick size is equal on both sides. So spinning top is something that happens and very, very effective when it is on the top of a trend. This is not a top of the trend, but it's a relatively small body with equal size wicks on both sides. So that's exactly what has happened in the Nifty. And Bank Nifty, it has given up 2%. So 0.5%, and Bank Nifty has given up more, right? It's showing more indecisiveness in the Bank Nifty. If you see the weekly candles, it has given up 2%, and it's an indecisive doji. And daily, if you see, these are daily charts of Nifty on the left side. It's an inverted hammer, and also this is also kind of inverted hammer with the hammer head having a little extra width, but the wick size is small, so you can call it kind of invert. So inverted hammer often, not always, indicates that there is a probability of a reversal in the trend that is ongoing. The trend that is ongoing is assumed to be downtrend. Here also trend ongoing is assumed downtrend. So there could be a reversal or a bounce up that can be expected as per the price patterns. Remember, there is no guarantee for any of these things. Probability says that most likely there is a chance, there is a probability. That's all you can say. Now coming to the next thing is the Bollinger Bands. What is the Bollinger Bands saying? You can clearly see that the Nifty, which was very volatile during the last several weeks, you can say from December month or so, the width of the bands was too high. That means volatility was more. Now it is skews. You can see that it is skews, and then now the band width has become equal as compared to the Nifty. So there is a clear contraction of the volatility that has happened. So that means volatility has got reduced in the Nifty, and Nifty and Bank Nifty is similar volatile and sideways, right? There is no indication of a bearish or upside move that is there, neither of this. Some expansion is seen slightly on Bank Nifty, but overall it's a sideways move that we can expect clearly. Market is sideways as per the Bollinger Bands, with reduced volatility in the Nifty now, and also the closure has happened below the 20 moving average on Nifty as well as Bank Nifty on the short term charts of daily candles, right? So it has created a kind of inverted hammer below the 20 moving average. There is bias is more on the bearish side. So support resistance level for the next week, you can see that it's at a support clearly at 7200, 7300 band, and then above that you have 17350, 17400. That's the resistance first, and then above that 17500 to 7600, which is Fibonacci 23 retracement level. Above that you have 17800 to 17850, and above that the psychological rounding number 18,000. Similarly, if the 17300 support is 200 support is gone, then you come back to the 17200, 17050 zone, which is also a previous swing low, and that could be a good support. And if that is gone, then it comes to 16800 to 16900. That's a Fibonacci retracement level, which is also a previous swing low. Could be a good support. If that is gone, then it comes to 16700, 16750. The next level will be 16550, 16550, and then you have the previous swing low, which is 16450, Fibonacci 50 retracement level. So that's Nifty. Bank Nifty, the resistance currently is at 37,700 to 37,800 band, and then above that 38,000 would be a good resistance. Then again 38,500 level is a good resistance. Then 39,000 good resistance. Then 39,500 good resistance. Support similarly below. Currently it's supported Fibonacci 23 retracement level, which is 37,500, and then below that now we have 37,000 could act as a previous swing low and a good support range. If that is broken, then you come to the 35,600 to 35,900. That's 36,000 nearby range would be a good support, which is also a breakout zone. Then after that, Fibonacci 50 retracement will come at 35,300, 35,000, that range. So that's the support resistance level, high level on the Bank Nifty. Make a note of these levels, right? Correlate that with what the opportunity interest analysis is showing, and then take positions accordingly. Momentum and the trend analysis, if you see, the Nifty has got, so overall it is all sideways. Nifty is sideways in the short term, that's daily. Nifty is sideways on the weekly, medium term, that's and there is some bearishness added to the scenario from the momentum, which is it is resisting below the 60. Whenever there is a resistance below 60 that is happening in the momentum, then there is a on the medium term. So chart that you see is daily, right? Daily it is sideways, Bank Nifty also sideways, Nifty also sideways, and weekly also sideways on both, but it is resisting. It has gone hit the bull zones and then come down. So that is something even making it little more bearish. Same thing is in the Bank Nifty medium term also, the charts of which is not there, but if you look at that you can understand there are no divergence at this point because it's a sideways movement on the short term that is happening. Now ADX indicators, if you see, it's bearish on the Nifty, it's bearish continuing on the Bank Nifty also on the daily chart. That means, but the strength of the trend bearishness is less, right? It is not rising up strength, so very weak bearish we can say trend, but trend remains bearish. Medium term also now Bank Nifty also crossed over to bearishness, and so medium term also you can say that the DMI negative dominating, and so overall the trend is bearish, and the momentum is sideways. That is the scenario as of now. Volatility, if you see, what happened was very strange last week. Like even during the budget week we had only some 20-25% kind of moves, but last week it spiked up 19% weeks up, so shot up again, which is showing the uncertainty that is there in the markets, right? So to come to 22.6 kind of levels, 1.6 kind of levels, right? So that's very high volatility. Anything above 20 has to be cautious. So we are at a very higher range of the wicks and the volatility, and the moves can be very sporadic and difficult to catch for a short-term trading. Open interest analysis we will be seeing in the next charts. You can see that open interest in the futures open interest for the Friday happened to be a short build-up in Nifty, but Bank Nifty it is short covering. So futures open interest is showing that there is bullishness in the Bank Nifty as compared to the Nifty futures. Now open interest for the options for the February monthly expiry, if you are seeing that, the levels we'll be seeing in the next slide. But before, if you see, the put call ratio is kind of bullish in the Nifty for the next monthly expiry. 0.86 is also closer to the expiry. You cannot say it's bearish, right? So there is some element of bullishness that is there in both the charts with Nifty, the put call ratio, right? Futures showing Bank Nifty is more bullish, right? Put call ratio is showing Nifty is more bullish. There's conflicting things. So weekly expiries can be very volatile. Now look at the levels of the event. So the range is between 17,000 and 80,000, 1,000 point range, right? Hardly 4 days left for the next expiry, this monthly expiry to happen. 1,000 points range is what that means. 17,000 is for the maximum put rating is there. 18,000 is where the maximum call rating is there. 16,500 has got the second highest put rating, and 17,500 second highest call rating. Look at the Bank Nifty's range, 37,500 to 39,000, right? That is more than 1,500 points of range that is there. Now that is a 37,500 has got maximum put rating, 39 maximum call rating, 37 has got second maximum put rating, and 40,000 also has got sufficient amount of call rating that is there, right? So it's a short covering. So open interest overall she's Bank Nifty has a less volatile and then more bullish as per the open interest data also. So this is the range. Make a note of these range: 17,000, 18,000 on the Nifty, 37,500 and 39,000, and correlate that with the support resistance levels that we had seen, and then accordingly take the positions and options, derivatives, futures, whatever, right? So that is the open interest analysis that is shown. So you can see that this market is not any, it's kind of sideways. It's not some unwinding of the put has happened here. Some addition of put has happened on the Bank Nifty. Bank Nifty is showing more contracts for puts right, relatively, but there are many days, few more days left for that, so this will keep on changing. So as of now, this is the picture of the open interest sectoral watch. If you see the IT sector, so overall you can see all the sectors were kind of down, slightly down or flattish, right? That's what happened. So if IT was the only sector that moved up, rest is all down weekly basis. You see, IT sector was 0.4% down, metal sector was 0.4% up actually, IT sector, but this is kind of flattish. Metal is down 4.5%, pharma is down 2%, auto is down 1%, FMCG is down 0.5%, realty is down 2.5%, metal is down 4.5% per week. And all of these have got sideways momentum. All across sectors, it is sideways momentum is what we can see. So we'll have to wait for the momentum to catch up to bullish zones, at least in the short term, to even think of having a top-down approach of picking the stocks from the strong sectors. This is sector. So you can see that the IT sector is kind of consolidating after a big move of several months, and it's kind of at the support zone, you can see. Metal sector is at a breakout zone. It is consolidating between this range. It was about to break out, but it didn't sustain. Previous week it was very bullish. Now this is gone down, formed a hammer kind of pattern. Momentum is sideways. Momentum is sideways. Auto is showing also again consolidation at a support zone. Formed a spinning top on the top. Right? Sideways momentum. Momentum from the bullish zone has fallen to sideways. Pharma is showing the bearishness. Inverted hammer. Sideways momentum. And is also broken off from the previous support, and there is bearishness around on the weekly, so all weekly charts. Now FMCG, you can see that it is at a support. A bullish ending happened in the FMCG on weekly basis, and reality sideways momentum, and reality also is having a small body, after a breakout. It is kind of forming the cup and handle which may go down for several weeks. Momentum is sideways and turning towards the support zone of the. So overall, this is the sectoral view that we discussed here, right? These are the charts. This view is based on the charts. Now index heavyweights, if you see what moves indexes, HDFC Bank was bullish last week, right? Sideways momentum. HDFC is also bullish. You can see the green pull, hammer kind of formation that has bounced from the previous support zone. It's also bullish momentum, just touching the bullish zones. You can see, right? It has fallen to the bearish zones and trying to climb back into the sideways. Reliance Industries was also bullish. Cup and handle formation is happening. It is broken out of the cup and handle's neckline. Now, will it break out here or keep on hitting the channel top and then come down and then consolidate? We don't know. We'll have to watch. But momentum is sideways. Now, in first, if you see its consolidation, we had seen that, and then it's a continuous 3 small body inverted that shows the pressure from the top, from the bears, right? Selling pressure is clearly seen by 3 consecutive inverted hammer that is formed. So inverted happens sometimes, but one of them is a gravestone, which is a bearish candle, and so that is what is happening. Sideways momentum, and Kodak Mahindra is recovered and bounced from near the support zone, and it is in hammer and the sideways momentum. TCS in the trendline channel, also an inverted hammer, not ready to break the trend line. Sideways momentum, but near to resistance at the bullish zones. ICICI Bank is also indecisive, small body, bearish, not small body, it's clear bearishness. Fallen off the bullishness on the weekly basis, but well within the channel. Not sure whether it will take support of the median of the channel or will it fall back to the down. And so we'll have to close the cross. Momentum is anyway fallen to sideways on the bull zones. This is ICICI Bank, not TCS. TCS is on the top. ICICI Bank, momentum in the bullish zones has fallen on a weekly basis. Right? Now, institutional participation, if you see, 12,200 crores of selling happened in FIS last week, and DA is about 10,600 crores. Not enough to keep the market in the bullish zones. Right? That's exactly what happened. There's non-stop selling that is happening from the FIS. If you see the figures now, 18, 17, 18, all FIS selling. If you see 2,500, 1,200, all selling. But all these days, they were consistently, domestic investors were consistently buying. You can see the same things reflecting the right side also. So institutional selling is the reason for the market not able to move up, right? Now, interesting thing is that US markets fell 2%. If you look at all the major indices, Dow, S&P 500, Nasdaq, all of them fell nearly 2%. The bearish candles are of course, you'll see that here, right? So this is a Dow Jones. It has taken a support, previous support, and it is very crucial that this support is maintained and does not fall off from this support. So if it falls up, then it will be reflecting in our markets also. Momentum is sideways for that. Trend is bearish, right? So Nasdaq, this is what trend line channels. It is ready to fall up on the edge of the trend line channel. Same as S&P 500, also bearish candles ready to fall on the edge. It's all weekly candles, right? So bearishness, bearish pressure, and on the edge of breaking trend lines and support zones is what you see in the US market. Now dollar index has moved up 0.5%. Actually dollar index had fallen. There's a mistake here, right? So this details we'll see in the charts itself, right? So you can see that dollar had fallen off after a big rise from the 93 kind of levels. It has settled at 88 kind of levels. So there's some cool off that has happened, but it is still having big volumes and big trend and momentum. So there is every chance that it can move upward, right? But there is some cool off that has happened below 92, 90 kind of levels. So 88 level is good thing. Gold is trying to break out, right? Big bullish candle is what you can see there. Channel top is about to break out, and the major resistance of at the 1917, if it is broken, the cup and handle breakout is what is happening. The momentum is caught into the bullish zones, huge volumes, bullish trend. So gold is breaking out for sure. So when gold is breaking out and making new highs, means there is very less chance that the markets will also move up, right? There could be a correction that you can anticipate, but gold, if gold is breaking out, if it is taking resistance and again coming down and so on, but if there is a clear breakout that is happening above this 1917 and then moving to 2000 kind of level, means market most likely may not perform well. It's for sure. Crude is cooling off, gold is so. This is what globally there is a lot of selling pressure that's happening in the mother market US. Dollar is getting strengthened, right? Crude is at a very high level, and gold is breaking out, right? So there is bearishness all around. Two stock picks. Sri Cement is a bearish setup. The trend line is broken and it is moving on in a trend line, and there is very likely that it can go up at least till this support zone of 22,615. It can break down from that also, but that could be the first charge. Another reason for the bearishness is it is resisting at the 40 support level and then going down. So this is very bearish indication in the weekly charts of the RSI. RSI indicator what is indicating, right? There is a rising bearishness that you can see in the ADX. The DMI negative is there. So overall, this is a short sell for Sri Cement. There is a long call on the Thermax. It's not a long call. Okay, this is just for educational purpose, not a call from my side, not a recommendation. But you can clearly study the charts that there is a breakout that has happened here. There is a flag pattern. There could be another breakout that can happen from top. There are huge volumes. There is momentum at the bullish zones, forming some kind of divergence, and then all this is happening in the medium term. On a weekly candle, the bullish, it is in the bull zones, and surprise pattern, momentum trend, all this is indicating there is a potential for a small swing trade, right? That's all it says. Similarly, a short side trade can be seen at Sri Cement and Thermax. Weekly charts is what you're seeing. Payoff diagram. So this is a calendar spread that you are seeing, right, which is giving very good probability of profit. Reasonable risk reward if you are waiting for targeting for only 2-3%, and a good range. So the assumption is that 17,800 may not be taken in the next in this February expiry in the coming 4 days, right? So increase the lot size and allocate the position sizing well according to your own capital. You can see that it is fully hedged position and the premiums required are less, and then it is risk defined basically, right? Your downside is protected completely. That is where the fear is. Upside there is not much fear, right? That's why you have gone for this kind. So basically we have taken a February monthly expiry is you sold monthly expiry call option, and you have bought a March 3rd weekly expiry call option at 18,200, right? 17,750, 18,200, and we're getting a range of 17,800. That's it. That's the index-based trade actionable that can be tried. So the wrap up, the market is facing resistance. This is a repetition of what has happened last week. Actually, I did not have to change much on the first 2 or 3. The entire wrap up I did not have to change. It just remained more or less the same. The market is facing resistance, that is sure. That is exactly what has happened. It was 3 days of continuous V-shaped moves that happened, inverted V that happened in the market, in the Nifty basically. Right? So overall it is consolidation and resistance, consolidation. That's what happens. So market view for next week is moderate bearish based on the momentum, the trend, the chart patterns, the Bollinger Bands and all that. Collectively it says there is a moderate bearishness and overall medium to short term sideways. So US market is facing stiff resistance and the bearishness can be clearly visible, right? And therefore there is definitely big moves out there will reflect in our markets also. Small moves may not, we'll have our independently, but US market falls big and or moves up big, then our markets definitely would react to that, right? Because there is institutional money that is flowing in our market. So US inflation, Frederick height, along with the Russia-Ukraine crisis and all this, collectively there is a fear of money flowing outside the market and economic turmoil can happen. All this fear and greed is what you see in the volatility and also in the market. Crude and rupees, adding fear to the possibility. Now gold is also breaking out. So normally when gold breaks out, markets may be bearish, tend to be bearish. So we have to be cautious on the downside. The positive factors is that there is continued strength. The market is not ready to give up that easy. Remember that it had fallen big and then bounced up from that, just like that. Volatility and the candle size may be very big, but overall percentage from the top, if you see, it's not too much of big fall that has happened. It falls and then again climbs back, then again falls. So that there is strength there, buyers on there at the dips. That is a positive factor in the now markets that you can see. Bollinger Bands is clearly showing that there is a sideways move and not a bearish move. The bearish is not clearly anywhere reflected, unlike the other markets. Our market Bollinger Bands is showing short term and the medium term it is going to be a sideways move, not a bearish as of now indicated. Now the concern is that VIX is shoot up and then it is sustaining at the 72223 kind of levels is a big concern. That means there is a lot of fear in the market because of all the uncertainties that we talked about. Right? So unless and until 16,800 is broken, one, 16,400 is broken, second. These two are broken means then we may anticipate a major correction that can happen from there. Until then it will be just consolidation that may be happening, just like how the Bollinger Bands are indicating. Always overnight positions if you are taking, no matter what confidence you have, always hedge it. Do not leave it naked because you never know how the gap up and gap down is going to happen. Intraday also tight stop losses are required because there is high volatility. The position sizing has to be very accurate and it has to be reduced or reduced to the least possible whenever the VIX is shooting up about 20, 22, 23, 25 kind of levels. Means even if you stay away from trade is the best. Even if you trade, position size reduced to the least possible. Right? And always overnight has to be hedged, intraday has to be tight stop loss based. Right? That's a wrap up. More this week. Next week is what is expected. I hope this helps you to frame your market view for the next week. There will be good volatility because it's a monthly expiry that's going to happen, and then uncertainty is there in the market. So anticipate that and then accordingly make a trade plan of your own. And hope it helps. And if this video helps you in some way, consider hitting the like button. We have very few subscriptions, so please share it to your friends, colleagues, put in your comments, feedback. All help us to keep ourselves motivated to keep creating content like this. Thank you so much. Happy trading, happy learning. Bye.